Hey guys, so in this video I am going to do a chart review on USDCAD. So looking at the 4-hour, we can see that a head and shoulders pattern is forming. So let's just take a look on the daily quickly. So what we have here is a massive impulse, and then we have a doji, and the market is exhausting. So when you look left, let's go to the weekly, we can see that we had previous rejection in January of 2016. So if we take the horizontal ray, it was like pretty much right on point. So around the 1.46, then exhausted and then started to drop. Okay, so just by looking at that weekly zone where you can see, like if you had this spotted out, you could see, okay, it will come up. It just went above like 54 pips because it almost touched a wick. For example, like if you had it at 46,915, it didn't hit that. It hit 46,644, like around that area. So what you would do is put it, like I said, go to the line chart, put it to the point, and then round it. So 500. Oops. Okay, so in this zone, so it tried to close above but then close below. So again, it tried to stop people out over here, and then it closed right below that 46.5. So it wicked at it once more. So around this area, that's where you would look to take an entry, and then it dropped a ton since then. But again, like weekly and monthly levels are really good if you see like major rejection in this area, because you can just double click this, for example, and when that area is coming up, you can just put monthly key level, just to remind yourself. Okay, so looking at current price, like I said, we were in this uptrend, then we had a huge impulse, we had sell orders because price exhausted, then correction, sell orders, correction. So now on the 4-hour, we can see that we're making a head and shoulders pattern. So we just got to outline it. So it tried to break above this area and then failed. Here's the head. Here's the right shoulder. Okay. So a lot of you will, like, for example, a lot of you would get in, or sorry, a lot of people in general in the Forex industry would get in after this bearish candle, because they're like, okay, it's gonna go down, but it only goes down like 35 pips and then it reverses 80. Okay, so you have to make sure you're getting that entry at that specific zone. So for example, you can get it at the head of this pattern because you just gotta look left. So let's extend it for a bit. Okay, so in this zone, let's see. Okay, so in this zone around 142,395, let's just round that. So anywhere around 142.4, and then the closest numbers to our round number is 142.5. Anywhere in this zone, you can start looking for an entry as long as the candle bodies are closing below, which they did. It spiked up, touched it again, doji, came up, and then closed bearish. Okay, so you could just set a limit order, or you can manually enter that trade at that specific price. So it doesn't have to show you, okay, there's a big bearish candle, because that doesn't matter, because it just comes up and retraces and then drops again. So it's all about taking entry at the very top or the very bottom, because then you don't get stuck in this, like, you know, in the correction. So yeah, you want to take that entry at that specific price. So for example, let's say we took it at 142.4. Okay, we put a stop loss. I usually do 30 to 40 pips, so let's just do 40 pips. Okay, so our first target would be around this area just because the market rejected. You're not looking all the way back here, you're just looking at current price structure. So our first target would be around here. So in this area right here, it's kind of messy right here, but again, you just look left. So our target would be, we always want to round, okay? So 143.94, let's round it to 400. Okay, so we have this little trend line here for the head and shoulders pattern. So let's just see how it plays out. Okay, so right here, it broke the trend line, then tested, and then came up and tested once more. Okay, so sometimes that happens. So that's why there could be 2 retests, there could be 1, there could be 3. Like, it just depends on the currency pair, and you just have to watch. But again, you just have to watch the whole move, and that's why you want to get in at a specific point, so you don't have to worry about like getting caught in the middle of that. So basically, we have left shoulder, head, right shoulder, then trend line or neckline, and then the price breaks, and then tests it a couple times, okay? So then we break structure here. Okay, so what's the next move? We have a rejection of going lower right here, so support. Guys, you can call it whatever you want, supply and demand, whatever. It all means the same thing. There's obviously know what supply and demand is and support and resistance, all that kind of stuff. All I look at is where the market failed to go higher, where the market failed to go lower. That's it. Okay, so around here, if we take a horizontal ray, we are looking at 38,705. Okay, so closest number to that would be 38.5 with a round number. Okay, so basically anywhere in this area is where we can look for an entry to buy. And then obviously, to be more precise on it, you obviously can drop down to the 30-minute and see how it's reacting, and then take your entries off 30 or 15. I'm just showing you exactly, like, because sometimes it doesn't hit that 38.7, like sometimes it will dip below, so you just have to watch price action to see what's happening. So let's just see what happens. Wow, hit hit that 138.5 right to the T. Okay, so when you're seeing that on lower time frames, you could have just put a limit order at that 138.5. Okay, because we can see there's rejection in here. So like I said, anywhere in this zone, and you're confirming on lower time frames, you can look to take a buy, because it's going to reverse up just like it did here. So basically, when structure is breaking on this side and you can see it's clearly breaking, you can move your target to down here. So your first target could be 138.7, let's say, okay? So profit level, yeah, 138.7. If you want, you could have set a TP to 138.5, but it's 20 pips, whatever. Okay, so basically that was a 1-to-9 ratio, so we risked 40 pips to make 370 pips. Like, that's a really good trade. And then once you see, obviously, that it's going to reverse, you want to get out of that sell. So Now we're looking to buy, okay? So let's just say we bought at that 138.7. Stop loss. Okay, so same thing. Target's going to be up here. Let's watch. Okay, so since we have resistance right here, like we formed a double top and also an M pattern. Okay, so since we can see that price isn't going up to this structure, we can get out. So a couple things. So our target was up here and it just kept going, right? So you can extend your target to this area right here, okay? So let's say you're still in trade and it corrected, but it's still bullish. So you don't want to get out until you see confirmation, right? If there's massive sell orders and you can see a lot of bearish momentum, then you want to get out. But all it did was corrected and touched again. But then you can just see from practice, oh, it's making a double top. It's making an M pattern. So then you would want to get out. Okay? So even with your target here, it's around 157 pips. So that's almost a 1-to-4. That's still really good. But if you extended it here, that would be 273 and almost a 1-to-7. So your targets are totally up to you and how many pips you want to catch, but you just have to watch and see how the market is trending. So basically, we're out of that buy. We see a double top. Okay, we take a short at this level. So what's it at? Take horizontal ray, go like this. Green guy. Again, I don't want it over the candlestick body. So let's try to round it to 500. It's too close to that body. So you kind of have to play around with the round numbers because, again, you don't want it to cut off the candle. So this is fine. So we can see that it's at 550. Okay, so 141,550 was where it rejected here. So then when you see this doji happening and close, you can either set a limit for 145,550 or you can take it right after that close. So let's just say you took it right after that. Okay, so that's around 141,473. So let's just round it to 75. Okay, so in this case, guys, if it's not close, or if it's too close, so let's say, okay, so 141,473 would technically be 500, right? But sometimes it's like cutting the candle body. So what you want to do is you want to focus on 0, 0, 25, 50, and 75. So quarters. Okay, in this case. Okay, so that is fine. So let's say we take an entry at 141.75, okay? Stop loss above. And we can put a close stop loss, like right above this resistance level because we took that entry right when that candle closed. So more than likely it's going to drop and we have a double top pattern. So we don't have to worry about getting stopped out. So you can put a really close stop loss. Doesn't matter. Okay, so we can see that our first target where price rejected is here. That's our first target. So let's see. Right. So now you can see that we created this M pattern, right? When the M pattern is created and we have that huge impulse, price starts to exhaust. And when you look on the lower time frames, you can see that confirmation. So it, like I said, it doesn't always hit these numbers, especially if it's hit it in the past, right? So we had a massive impulse. We're waiting for a correction because M formed. It's not going to form like this. It's not going to form all the way down. Like, it doesn't do that. It goes like, it forms an impulse, and then again, market always has to correct itself, okay? So as soon as you see that price is not hitting here and that it's rejecting, so this is where candlestick analysis comes in handy, right? So candlestick analysis you want to use as an extra confirmation, but not the first confirmation. You want to use zones as your first confirmation. So we have a really strong bullish candle indicating that the market is about to reverse. So again, when you see that, since it broke structure here, like your first target is here. So that's still good on 1 to 3, almost a 1 to 4. So you made 120 pips just on this move, but you see how it completely broke? So you can extend it, but you have to watch and see what is happening with price, right? So as soon as you see the market reverse, you can take your sell position out. Because again, all these trades that I've showed you so far are over 100 pips. So again, it goes back to your trading plan. How many pips do you want to catch a week? Like, what's your goal, you know? Okay, so let's see what happens. Okay, so it hits that 138.7 and it hits it again. Then it starts reversing. So why it rejected here is that it didn't have enough bullish momentum to get to that 141.5, which is fine. You can also take an entry here. You just have to watch it. That's all. So you have your 4-hour chart, and then you can move to a second chart. However you want to do it. You can just go USDCAD, and you can put this as your 30-minute chart and have your 4-hour to see, okay, this is the bigger picture. This is what I'm going to do for my entry. You can do it a couple ways. You can do it that way. If you don't have the pro membership with Trading for You, you can just use a different tab, and you can go USDCAD Trading View and just go 30-minute or 15-minute, whatever works best for you, and then your higher time frame just for that confirmation to get that entry. So the market rejected here, then came down. So again, there's so many entries, okay? But even from this entry and taking profit here, that's a huge amount, right? Like each setup I just showed you, that's like, I think close to 400 pips. Like it's a lot of pips. So again, you could have took an entry here because what happened is it started to respect right here, wicked, closed, pin bar, shot down, okay? So then we can see that we rejected this twice. So again, price tested the 138.7. So let's say you had a buy entry, okay, at 138.7. Stop loss below the 38.5. Okay, so came up and then you get scared because it comes back down and tests it again. But you just have to watch. Okay, your stop loss is in place. If it ends up breaking, then you can see, okay, it's going to end up breaking. But again, it's rejected 1, 2, and this is the 3rd time. So it reversed. Okay, so we extend this guy out. So our first target would be here again. And let's see. Okay, so impulse up, correction, but then it comes back down. Okay, so this is where you got to be careful. So right here would be our target, because guess what? So sometimes your emotions control you and you need to just ignore that, because you need to focus on it. You need to focus on what's happening. So it's telling you right here, it's saying, okay, bullish impulse from the 138.7. But then we have a zone here. So we broke it. Now it acts as resistance, okay? There's no bullish momentum whatsoever saying that we're going to break. There's no break and retest. There's nothing. It closed below, ranged, and then completely dropped. So you have to be careful. When you're in this trade, let's say, you don't, like, when it's trending, you don't have to keep your stop loss here. You can keep it at break even, or you can even put it like in between this, like whatever. It depends on what you want. It's totally up to you. But always have a stop loss, and always set it at break even no matter what, when it's trending. So that's totally up to you. So what happens is it respects this level, okay? So again, we can take a short. And then our target is the 138.7, and then it completely breaks, okay? Okay, so then we're just looking for another level. So that's when you go in the daily time frame. So we have one in this area. Okay, so it's exhausting right here. Let's just see. Okay, so it's trying to break, and it breaks. Okay, so this is a breakout scenario. Arrow. Okay, so we range in this. We can't break above here. There's no bullish momentum whatsoever. We end up breaking structure, testing, boom. Okay, so another entry right there. So there's entries all over. You guys just have to watch the market, and you have to get it at that specific point. So let's just say you held from May 6th to June 2nd. Okay, that's a month trade. So that's 654 pips. Okay, but again, like, some of you just like catching 50 pips per trade. Some of you like catching 20 pips per trade. Like it all depends on your trading plan. Everyone's different. So for me, I hold trades during the week and then I get out. So, I mean, taking advantage of, like I said, this sell here, this buy here, so on and so on, like that'll give you a good amount of pips like we've just went through. If you guys have any questions on this video, please let me know.